With China undertaking fresh lockdowns due to their zero COVID-19 policy, the fear is that it might impact supplies of key starting materials and active pharma ingredients, the inputs that go into making formulations or drugs. Remember, India imports around 70 to 80% of their key starting material and API requirement from China. Feedback from API companies as of now, however, is that there is no impact on the availability of KSMs or APIs from China. Some ports, for example, are functional, hence overall movement of goods is taking place. However, it is slow. Inventories are currently either in the port or on the sea. However, they do sound a note of caution. They fear shipments could get impacted April onwards, and concern will be when forward covers reduce. There will be more clarity, however, in the next couple of weeks. However, it is unlikely to be like 2020 and the supply chain disruptions that were seen then. Companies estimate the worst case is an impact of around 20 to 25% on production in May, but no shutdown in plants. Lastly, a few examples to illustrate our dependence better. METFORMIN, which is a drug used to treat diabetes. India has almost 100% dependence on its inputs from China. Currently, prices are at around 350 rupees per kg and could rise by 20 to 25% in case of non-availability. Similarly, for paracetamol, the pain drug, India has around 50% of dependence on a key input of the drug, PAP, from China. Prices have been impacted due to higher COVID-19 cases as the drug is used to treat COVID-19. Paracetamol prices have risen to around 700 rupees per kg versus 680 rupees in just the past few days, due to the rise in COVID-19 cases. However, it is still off the highs of around 850 rupees per kg it had hit in the peak of the pandemic. Ibuprofen prices, according to companies, are not likely to see much of a rise from the current $9 to $11 per kg, despite 20% of raw material from China, as it is not used as much when COVID-19 cases rise.